Retail in focus this week. We're standing by for earnings from Tiffany's, Best Buy, and DSW as strong sales boost shares once thought to have been overtaken by online shopping giants. Joining us now, S&P Global Market Intelligence Portfolio Manager Erin Gibbs. Erin, give us your view. You're from 30,000 feet of retail right now.
Well, some retailers are doing really well at competing with online sales. And for example, Best Buy, their online sales are actually their highest growth area. So if you're doing that well and understand the new economy, you can do well. Some other retailers, particularly DSW, not so good at online retailing. They missed their revenue estimates last year. It's not looking as good for them. And they're not considered buy. In fact, DSW is trading well above the analyst target price. So there's actually a potential downside there. So it's really about, have you embraced how people shop today? Have you implemented that? And so in that case, you really want to look at, have they put the capital spending into changing how consumers spend, or are you kind of still using the old stale model? Well, Tiffany's is a little unique in that it's such a luxury retailer.
Right. So when you look at the retailers, you're seeing, though, them do well in different categories, like the low-end Walmart and Target doing really well, and then you also see the consumer trading up to higher-end brands or even stores like a Tiffany's. But one thing that I think when you think about the retailers is that the question mark is around margins. What's going to happen with margins going forward? And what we've seen, though, is Macy's, some of these other guys, they've gotten really good at turning inventory quickly, so they've been marking down less, so gross margin is solid, but they're also investing in their e-commerce business to compete with the Amazons of the world.
And that's similar, is it based not just online, but just embracing technology, better inventory control. One of the big issues for most of the U.S.-focused retailers right now are freight costs. Because just shipping it's a notation in every single person's report is increased freight cost. So can you manage getting the product to the consumer better without having to drive it across the United States? And again, that's all part of embracing online shipping, more localized warehouses, understanding how to get the product to consumer in the most efficient way and still making it a product where you can sell it. And I think Best Buy is really one of those companies that have done it well, where the stores are really just viewed as a place where you can see things.
It's the old, like, Sears showroom, right?
Yeah.
Where you would go in small towns in America, you go in and they'd have a catalog and you get to flip through the catalog. I mean, it's not quite that base.
Exactly. But the showrooming type of model with lots of warehouses, so you don't have to worry about shipping as far, that is a new model, and that is helping with margins.
Right.
Yeah. Other than the fact that retailers continue to take price, I think a lot of it comes down to shopping is still considered an experience, and the malls are all converting into these restaurant and movie theater and bowling alley complexes. But people love going to Target. We had the Target earnings about a week ago, and or a week before, and the traffic numbers were off the charts. There's a company that was left for dead with everything going on, and there you have it. Walmart earnings were great. People love going to Target. I joke that Target's the happiest place on earth, not Disneyland. But that's what it comes down to.
People are pretty happy at Walmart, too.
Walmart Walmart is another success story where they've really been able to get consumers in and make it a positive experience, and then you end up buying 10 other things that you weren't planning on to.
You know, and the thing is, with the stronger dollar, sorry, Jack, with the stronger dollar, that's also going to increase purchasing power, even with tariffs and the fear of tariffs threatening things. Is that something you see continuing, at least in the intermediate term?
Yeah, I think this is definitely a trend that we're not going to see turn around anytime soon, and the retailers that embrace it, certainly you have to address it when at different scales. Tiffany's will obviously need to have a different model than your Walmarts, of course, but being able to control your margins, control your inventory is really one of the key points.
Erin, great to see you so early in the morning. Thanks for being here. Look at the world of retail. Erin Gibbs.